Good morning, it's Jeffrey Cohen, Chicago Quantum. I'm an investment advisor representative and the president of U.S. Advanced Computing Infrastructures Incorporated, and we're here to talk today about what happens when you set up a set of managed accounts or a hedge fund and the market looks green. So the last 2 weeks, the markets have been red. It's been a bear market, right? And so today, for the first time, we see stocks, risky stocks, going up. We see commodities going up. We see the U.S. dollar dropping. We see long-term U.S. treasuries increasing in price. These are all very positive. And so what happens? And so we thought we'd share it with you. So as you know, we are starting a new fund called the Chicago Quantum Net Score Smart Volatility Fund. And I've been paper trading it, and I've been showing you what we've been doing. And I got to tell you, it's made money pretty much every single day in the bear market. Now, that doesn't mean it's going to make money in a bull market, but we're going to find out. And so we're about to put a lot of our own money into this fund. We're going to open it up. We have our paperwork submitted to our custodial firm. And so that will mean that you will be able to put money into the fund, not by sending me a check, but by sending our custodian a check, who's a $4 trillion money manager. And then they send you out statements and things like that. And so it's nice. They handle all the administration for us. I mean, we pay for it, but it's good for you. Let's just talk about what happens. What happens, Jeffrey, when the market goes up today? Well, first thing I want to tell you is, we do publish what we're going to do. So I'm going to walk you through just some basics. You could probably read this pretty quickly. And so, generally speaking, our hedges have been carrying the day. Today's a green day, and so our hedges, which were short, are up. So what are you going to do about that, right? So go ahead and ask me anything, by the way. Just go ahead and chat there. That's great. So stocks are up, hedges are up, right? And so the key to our model is whether our longs are going to move faster than our shorts, right? And so our model suggested a smaller, riskier portfolio today. And so what are we going to do? We are going to sell long positions into strength. It's crazy. We're going to sell 2-to-1 our long positions. We're going to buy back shorts, and we're going to buy back hedges. And so from an overall market perspective, big players, when they go riskier, they tend to go smaller. And so what that means is they shed a lot of like dead wood from their portfolios because they want to get rid of that diversification, and they end up buying back shorts. And so they buy the S&P 500. They buy dog stocks. They sell good conservative stocks, and they buy very risky stocks. And so I'm seeing that in our own model. It's so interesting, right? And so I shared that with you. I think that's helpful. When I share with you what the model did today, its best portfolio, I'm just fascinated by this, guys. By the way, we got our model to run a lot faster last night. Tons faster. And that might be why, it did what it did, but it only picked 10 stocks. AMD, Digital Turbine, BX, right? So I'm going to show you who these are. You deserve to know, right? Advanced Micro Devices, Digital Turbine, Blackstone, Coinbase, Dillard's, Mercado Libre, which is an e-commerce company, very risky, NVIDIA, Surgery Partners, Silvergate Capital, and SI Time. Now, in our portfolio, we're going to keep a few others. And I say that because there are stocks that our model wanted us to sell, but we're going to hold for another day. And one of them is CG, and one of them is Amazon. So what happens is Amazon and CG are picked by like second, third, fourth, fifth best portfolios. And so we have to make a decision, right? Do we want to have all this trading volatility, trading costs, or do we want to just let it ride? And so we've got two stocks we're letting ride. We are selling Meta and we are selling Rocket Mortgages, and we're buying Surgery Partners. And so you got to make the call, right? What are you going to sell? And what's interesting is Rocket, it wanted out. It's got a beta of 1.5. And Meta, it wanted out. It's got a beta of 1.8. And the overall beta of our portfolio, 2.23. That is a super high beta for our portfolio. And so we took down our total. It's a $50,000 fund. We only have $11,150 invested in our longs. We have $25,000 in our S&P 500 beta weighted hedge, and that's just an anomaly. So that's 788. It's interesting. That's off. That's off. I'm not sure why that one's off, but that's okay. We'll fix. But basically, it's going to be the same thing. It's going to be 11,150 for our CQNS down run, and just to show you kind of the net, right? So our daily results P&L. If we scroll back a little bit, so our long investments have been losing money every day. It's not quite true. We made money one day, right? But our hedge went up all but 2 days, and our CQNS down run hedge went up all but 1 day. And actually, those gains are tremendous, right? Look at that, 900, 1,200, 300, 600, 800. Our losses on our long portfolio have been pretty small. You can see it on a percentage basis. And our cash balance, which is really how we want to measure value in our fund, and this smooths out over time, 35,000, it's up to 39,000. So we've made about 12% cash in our fund over 8 or 9 days, and we went from 19,400 NAV, I'm so sorry, to 25,000. So our net asset value has gone up dramatically. Our cash has gone up dramatically, because really managing the fund, it isn't about where we are at open versus close. It's have we made money over the period. And in fact, this fund is generating cash and net asset value really over the 8 days of the fund. And so it's still too early to tell. And that's why we're so excited to find out what happens on Tuesday, September 27, day 9. And this is of our new, when we've kind of locked everything in. So what happens? And so I want to show you again kind of where we are. We're going to need that because we're going to make those trades this morning. You know, the last thing I need to see is a ton of commercials, right? So let's hide something on the page. There we go. Looks good. Confirm. All right, so it's better, right? Who needs all that crap? Bunch of scantily clad people, right? I don't need to see that in the morning. I sent off my wife to work. That's the only scantily clad I need to see. So if we look at our 4 dog stars, the 4 stocks that are actually supposed to go down, 1, 2, 3, 4, 3 of them are up pre-market, right? And so whatever happens in our model, we need to overcome what looks like about almost a 4% up on the day. And so we look at the S&P 500, that's up 1.3% pre-market. And then we look at our stocks, and they're up really from about 0.9 to 6. So it looks like if we were to have sold and the day was over, pre-market, the dogs are doing better than the longs are. And so that's troublesome, right? And so we need to see how that's going to play out. And the S&P 500, remember, we're at a beta of 2.2, so that's like a 3.5, 3 3/4. It's going to be a real horse race to see whether our uprun stocks outperform our hedges. In the blog post, I talk about this is where you either make your money, right? Do you make enough money, right? Do your ups go up fast enough to cover your downs? And so we're about to find out, and this is very exciting for us. And so that's what I wanted to share with you guys. This is where we are in the model, right? You take a look at the futures; they're all green. Green is good, and I'll show it to you on FinViz as well. Look at the stocks are very, very green. The VIX is down. Energy's up. Commodities are up. And so, all right, I want to thank you for watching. If you liked the video, drop a comment. We love that. Hit the subscribe button. Tell a few friends. And if you want to learn more about our operation, just go to www.chicagoquantum.com. Thank you very much. Take care. Good luck in the markets. Bye-bye.